everyone for joining us this afternoon. As Chiba was just telling me, he hopes the food is good, but not so good that you can't focus on what we're saying here for the next 25 minutes or so. But the focus we were just hearing there is really about trying to support the startup ecosystem, and HSBC was just saying what they're doing. But I think just to start sort of bigger picture, it has been a very, very tough funding environment for a lot of startups there, because we talk about there's sort of the exuberance, and then you shift really into that sort of level of not despair, but it's a very, very tough environment. So, Chibo, I think we can get started and just talk about where you think we're currently at in the cycle.
If you asked me that question maybe 12 months ago, I would have been very, very depressed, because clearly, the market was very bad. For the last 24 months, it's been very difficult for all of our, the entire ecosystem, including our portfolio companies, to raise money. I think the height of the market in 2021, 22, the valuations were really high. A lot of companies were able to raise money. After that, basically, especially here in Asia and in China, a lot of capital just went away. And so, I think for those companies, it was very difficult to raise money. A lot of them had to do internal bridge rounds. A lot of them were looking at down rounds, and a lot of them just died. Thankfully, going into these next 6 months, I do sense that there is a little bit of a transition. So a lot of our companies that have grown, that have managed to, number one, stay alive, readjust their cost structures, and show that they've been able to grow over this period. Now they're talking to investors. Investors are starting to come to the table, right? And so they're able to talk about next round financings. They're able to talk about good companies are able to talk about 10-20% premiums on the last round, and some are even gearing up in the second half for a much larger kind of Series B or C. So I do think that hopefully we're at a turning point. In the second half, going into next year, will be much better.
Do you think as well that we're at a sort of turning point in the cycle?
So we've had a very different experience for most of the venture equity players in the markets. So we've got two funds, which is venture equity and one venture debt private credit fund. And over the last 12 months, we've still seen a lot more appetite in the equity stuff, but also we had a big exit last year on the NASDAQ, and so that's been helpful. And so I think from the liquidity or funding markets perspective, the public markets have started opening up. The local markets in Southeast Asia, and I mostly invest in Southeast Asia only, markets have been strong on a local perspective. So anything sub $1 billion have been good, and that's been strong in terms of IPO performances, liquidity. And then we've got another vehicle, which is more private credit, and we've seen a lot of demand in the last 2 years or so. The private credit fund is returning about 26% IRR, and so numbers have been strong. People are coming in. The guys who could not raise equity have decided to take credit instead. And so the guys are also more pragmatic in their views of cost of capital. And the way we say, if your equity is 10 times, it's 1,000%, and a 15% interest on your cost of capital is probably meaningless if you're thinking that on the long run you guys are looking for a 10x return on your capital. So for us, I think if you do it from a blended basis from costs of financing, we've been okay. And so our products have been good in the sense that when equity was not as strong, we've kind of had the credit fund to fall back to. But also at the same time, I think from a liquidity standpoint, we see a lot more liquidity in the local bourses as well.
So it sounds a little bit more optimistic, but Chibo, you're talking more from the perspective of what it's been like really in the GBA region in particular. Do you see that shift really coming through in the AI space in particular, or are there other industries outside that? Because AI has been such a hot button topic, of course.
No, I think that's kind of a blanket statement. The macro has just been not good in the last 2 years, and I think that extends outside of China as well. There's a lot of capital in Southeast Asia as well, but just not a lot of people are deploying in the last 2 years, right? I think everyone has just been taking a more of a wait and see, and let the valuations settle down, and companies just kind of go through their cycle, go through their runway, and then get more realistic in terms of their expectations. Obviously in China, given the geopolitical situation, there's also been a big withdrawal of kind of US-backed capital. And so, all the top tier GPs in China that were backed by the US pensions and endowments and all that, they haven't had money to invest in the last 2-3 years, right? A lot of them are actually going to Singapore. They're going to Southeast Asia saying, hey, we're looking at Southeast Asian opportunities these days. right? And so like in China, it's just been a very difficult funding environment. I think within certain sectors that the government has been pushing and been very vocal about in the deep tech and the semiconductor and the energy spaces, there's still interest and there's still investors deploying. I would say that the nature of those investors has changed. A lot of those are more strategic and corporate in nature, right? So different players along the value chain with money are trying to expand their roles in that tech stack. And so, we've been investing alongside a lot of these strategic investors now at much more reasonable valuations because they're bringing revenue and business to these startups and not just capital, right? And so this is a big change from 10 years ago when all the capital was from VCs and financial investors.
So do you think then that the investment or the investor mindset has shifted because the geopolitical headwinds are not going away, and in fact, of course, we're in an election year and they could get even worse. What do you see there?
I think we're in a huge transition period, right? I mean, for the world globally, but also for Asia and this part of the world. I mean, I don't want to say too much about it since this is a Bloomberg event. But we're seeing a lot of kind of quote unquote Chinese capital, repositioning itself, figuring out where it should best be, deploying their capital instead of just for purely financial returns, but also looking now more at strategic objectives, right? And I think that's great news for a market like Hong Kong. Right, because Hong Kong is going to be, I guess, the safe place for all this capital to be deployed in the next 3 to 5 years. But it's just going to take time for them to work through their internal structures and strategies and set up the relevant teams. Right, I mean, not just Hong Kong, but Asia as a whole. I mean, along the whole Belt and Road. I mean, this is like a relevant space for this capital to be deployed. But a lot of education needs to happen.
We can get to that more in that a moment, but Southeast Asia, of course, has been a big winner as well in that +1 strategy.
Yes, so I think for us, I don't share the same gloom and doom in GBA or this part of the world. We've seen, certainly fortunes change and favor us in a very big way. So if you look at Intel and Microsoft and Google, everybody's coming in a big way to invest in Southeast Asia. Every week there's a new announcement of FDIs coming in, again, semiconductor, data centers, AI, when within the space, EVs as well. Indonesia is a big beneficiary of nickels coming in and investing in that part of the world. But again, that kind of translates into EV batteries, EV cars, semiconductors, like that entire ecosystem in Southeast Asia is thriving at this point. In Malaysia itself, we're the 6th largest economy for semiconductors. 28% of the global semiconductors is from Southeast Asia right now. We see that translating into the tech ecosystems, startups, and so everybody's pretty bullish in the market right now. I think for the first time in a long time we've fought political stability in the sense that pretty much every country has gone through an election and looks stable in the next 5 years plus the 5 years prior. And so I think for once we're okay and seem to be on track for growth. I think we're ranging between 5 to 10% GDP growth as a region as a whole. Things are good. Liquidity is coming back. U.S. China is looking at us in a very different way, not just geopolitically, but also as a actual +1 strategy to their current strategy in terms of like business development or expansion. And so we've been quite fortunate. And so we also see that translating into the startup ecosystem and also investing in this part of the world. And so it's been pretty decent for us in the last 1.5 or 2 years. The liquidity, yes, I think is not as vibrant as 2021, but certainly has not shied away in a very big way.
Some of the names you mentioned though, like Intel or Nvidia in the industries, chips, EVs, they're very big.
Yes.
So from a startup perspective, where are the opportunities?
Yes, so within AI, there's a lot of technology coming in, but also everyone talked about e-commerce for a really long time. I think so. Venture capital in Silicon Valley back in the days was actually Intel, right? It was Intel chips, and a lot of guys kind of spun out from Intel, and again doing hardware. So I think we're going back to a bit more being more open-minded about just being venture and in early stage in any sort of businesses versus just being focused on commerce, the Tokopedias or Pinduoduos of the world. And so I think the way we're looking at it right now is how do we develop a more robust ecosystem. And so if you're talking about e-commerce growth or data centers, then you need the other stuff that comes with it. So investments across the board needs to happen versus just, let's make people buy more stuff.
I guess just to quickly add on to that, since Gobi, we're dual headquartered here in Hong Kong and also KL. I mean, when we talk to our LPs and different investors about Malaysia, we're also similarly excited. I mean,
Yep.
like Malaysia is going to be a very important kind of neutral ground within the macro kind of geopolitics. And what we're seeing now is a lot of different kind of nations and players kind of looking at Malaysia and being like, look, I mean, this is a place in the global south where we can build a standalone kind of tech ecosystem that can service everywhere, right? And it can be neutral. And Malaysia is actually the only place within Southeast Asia with that, high deep tech capability, just because it's had nearly 50 years of kind of manufacturing experience in not only just the automotive space but also in the semi space, right? Previously it was more low level on the value chain, but now these days, I mean, there's a lot of companies in Penang, for instance, that are starting to do IC chip design and other more interesting things. And so we're actually doing a lot. We're flying to Penang basically like every other day. I mean, there's so much going on there, and obviously there's a lot of support from the Malaysian government for us to kind of be investing in that.
I think you touched on it a little bit before, but are there any sort of silver linings, do you think, that come out of geopolitical instability within this region? Because if you've got that sort of decoupling that's going on between the US and China, does it give rise to new startups that are taking advantage of that here?
Yeah, no, 100%. I mean, like what I mentioned in the global south, the neutral ground in Southeast Asia, but also just in China as well, right? I mean, traditionally Chinese companies have had to go, and still today, I mean, there's a lot of chips and a lot of kind of different products that they need to source from the US. They in terms of the overall tech stack, I mean, probably 60-70% was actually brought in. And then manufactured or assembled in China. But now Chinese companies need to have their own tech stack. They need to have their own kind of chips and their own softwares and hardwares, and that lends to a lot of opportunities about the localization trend, right? I mean, that's something that the government has been pushing quite a bit, right? I mean, just having a localized version of international level or global standard kind of technology.
The push, though, from the government, of course, to develop these sorts of industries and to achieve a level of self-sufficiency, it also comes against the backdrop of what was a multi-year crackdown on private enterprise. So do you see that having had impacts or effects on the psychology as well?
Yeah, no, I mean, that's a great question. And, I think that the easy answer that, people outside of China would want to think is that, because of this crackdown, because of regulatory pressures, the entrepreneurs will just stop, right? They'll be afraid to innovate. That can't be farther from the truth, right? I mean, like, people in China, they're hungry, they're driven, like they're motivated to create better, livelihoods and careers for themselves. And so they will never stop. But the way that they are going about building their businesses now, that is what's changed, right? And it's a kind of a subtle difference. But these days, as entrepreneurs go about building their startups, from very early on, they're starting to think about, okay, well, how can I bring this technology or these products overseas, right? They're thinking about how do I start, or at what point do I then, open an office in Singapore or open an office in Hong Kong, or try to diversify their revenue streams in their business. And so that's something that I think has been a market change, and that's something that here at Gobi, I mean, we've been able to help a lot because we have such a regional platform. And so when these Chinese startups say, well, who are the investors that can bring us to Southeast Asia or bring us to abroad, that's the value add.
And do you see that in Southeast Asia as well, that trend?
Well, we'll see a lot more guys coming in a very big way. Startups, ecosystem players, investors, SOEs from China coming in, across the board investments. But what's been interesting also, we've seen a lot businesses in China coming into Southeast Asia. So Luckin Coffee, for example, opened up 800 stores in Indonesia overnight. Like genuinely, it was over 2 months they kind of did that. They're doing the same in Malaysia, doing the same in like Singapore. I think the reality of it is a lot of the businesses that have typically been in just US or China alone or kind of did more cross-border businesses have now came into Southeast Asia in a bigger way. So again, funny enough, like it's not just the investments coming in, but also the ideas and the businesses are coming in. And again, another thing that people are doing is, if there's chips from the US and they can't go to China, a lot of it is funneling through Southeast Asia right now, repackaging and kind of putting that into China. Again, I think there should be better sanctions on this, but essentially you do see, as being like the +1 or value-added packaging, testing, and everything else going to China and vice versa. So I think, to be fair, we've been very fortunate and lucky to be in this environment. And as long as US trade wars continue to happen, we'll probably be a big beneficiary.
Mm-hmm. We've spoken about startups, but what about as well for fundraising?
Yep.
You said before that you're looking to raise funds at the moment. What's the environment like for you?
So I think we've been okay on the private credit side. I think numbers are strong. We've been kind of fortunate that Southeast Asia is something on top of everybody's mind. US money is looking at Southeast Asia in a very big way, but also mostly North Asian money. So a lot of our LPs are based in Korea and Japan, and they've been the biggest proponent of Southeast Asia right now. One, because they understand the ecosystem, but two, also they've been a long-term investor of Malaysia. I think Malaysia-China relationship is 50 years old. Malaysia-Japan relationship is 80 years old, right? And so to be fair, that relationship has been strong, and you see that coming in a big way. The other one that we talked about shortly just now was Middle East. I think they've always been a staple source of capital for us, and I think that's been okay for us in the long run, and will continue to be beneficiary for us.
Chibo, as well, we've spoken about the Middle East connection. How are you seeing that? Because it's been something really marked here in Hong Kong, is that growing relationship, really?
Yeah, no, I mean, we're definitely seeing a lot more activity between, these two regions. I mean, like, obviously China is the biggest customer for Aramco in Saudi, and so, there is a market effort for a lot of these kind of corporates in the Middle East and governments in the Middle East to kind of come out here and try to build more partnerships. I mean, Middle East is now also looking to build its own innovation ecosystem, right? And so they're spending a lot of money and effort trying to draw talent, draw startups, draw capital to fund and to create their, a local ecosystem. I think there's different factions in there. I mean, there's obviously UAE, there's Saudi, and Qatar. But everyone has a lot of money, and so everyone's just trying to just do what they can to bring the people over. From our portfolio side, we actually see a lot of companies going over and setting up offices. So it is working to some extent. I think for these startups, it's also an opportunity not just to get funding, but also to tap into a market that hasn't really had that much tech of its own.
Are you concerned at all about the permanency of that money, of that funding? Because we have seen a number of funds in the Middle East or that have been willing to divest from Chinese investments in order to keep in good, really, with the US.
Yeah.
Do you see that at all, or are you concerned about the stickiness?
I mean, I think that will always be a balancing act for probably most countries around the world. I think everyone wants to stay on the good side of kind of everyone, right? And I think that's natural. At the end of the day, I mean, neither the U.S. nor China are going away, right? And so they still have to find ways to build those bridges, whether that's more publicly or more privately, right? But we're seeing it happen on the ground nonetheless.
What about in your part of the world, in the Southeast Asia? Are you concerned at all about Middle East pullback, or you think it's quite permanent there, given, of course, the Islamic connection?
I think for us, for Malaysia and Indonesia will always be a big beneficiary from the Middle East. The Islamic or Muslim Islamic connection has been helpful. Malaysia is one of the largest Sharia market. It's one of the biggest halal economy in the world. I don't think we will ever, fade away from the Middle East connection. Again, between the two governments or multiple governments, it's been strong, and so I don't think the Middle East will be pulling back from us anytime soon.
Mm-hmm. Okay, let's just talk about maybe in the next 12 months or so. Do you think that the AI theme is going to be really what stays the strongest one?
I think people are certainly starting to pick up the application use of AI. I'll give you an example, right? My mom uses it. And so, when my mom uses it to write her speeches, it's here to stay because it's mass market now. People understand how to use this, and it's easy to use. And so for me, it is. I think it depends on how deep the technology is. Again, if you're saying, it's going to take over the world, probably not. But I think it certainly enhanced and eased a lot of the everyday living.
Do you think that there's more pressure, though, on startups to start to monetize their AI offerings?
Oh, for sure. I think, monetization has been a big issue in the last 2 or 3 years where liquidity or cheap funding is a concern, right? And so companies are now being smarter with the way they've used and developed the technology. So while the technology is good, what's the use case? How do they monetize? That's top of mind for everybody right now.
Do you think when you have that monetization push and that perhaps backing away from growth at all, does it affect the growth potential of companies as well if you're too focused on showing that there is a commercial benefit?
No, I mean, at the end of the day, I mean, companies are built to make money, right? I mean, otherwise there's really no point of having that company. I mean, so, monetization is of course important. I mean, I think for your earlier question about AI, I mean, like AI is something that's been around for over a decade, right? I mean, like there's just been different industries, different use cases where it's been applied. We've been investing in AI way before, ChatGPT. That being said, I mean, obviously ChatGPT spurred like a whole new wave of kind of LLMs and kind of opened up a lot of people's minds in terms of the different applications. And because it was so consumer-faced, that's how society, hyped it up. Right, and I think indeed, I mean, in China we've seen like a number of kind of LLM companies that have raised exorbitant amounts of money at even more exorbitant valuations, and they spend all that money just to go buy servers and chips, right? But like at the end of the day, like a lot of them are still relying on some of the open source stuff that has come out and just kind of repurposed it. So I do think that there is a hype bubble there. In 5-10 years, there will be a winner, obviously, because China will have to have its own ChatGPT or LLM kind of correspondent. But I think it's, in the interim, there are still a lot of opportunities to be investing along specific use cases or specific industries that would make sense for many startups.
But do you think this is sort of the period now where we start to see valuations come down a little bit?
For the LLMs, yeah. I mean, like the moment these funds start putting together SPVs for ultra high net worth to try and squeeze in at the latest round valuation, that's the top of the bubble, right? I mean, that's always been the case.
We haven't seen that much LLM stuff in Southeast Asia, so I think if you can raise, you're going to be a good company anyway, so you'll be fine.
Mm-hmm. Then looking out again, what would you say is the next trend beyond AI? What else are you looking at? Because Chiba, I know you're on the record talking about AI back in 2018 or so.
I think for now it's still here to stay for a little while. I think people haven't caught up in full. But certainly I think when we were talking about semiconductors and the larger ecosystem, that's probably benefited from the conversation as well.
I mean, we're looking at all the deep tech areas, from advanced manufacturing to semiconductors. I mean, healthcare is something that Hong Kong GBA has been pushing a lot. Obviously, different markets will be at different points of the technology cycle. But I think what we mentioned earlier in Malaysia and Penang and some of the semi and deep tech stuff, I mean, that is an area that we're looking at too. But in general, I mean, I think we're still just going to be expanding along the developing economies in Belt and Road. I mean, that's something that we're active in building out.
All right, I think we're out of time. So Chiba, thank you very much for your insights, and Rachel as well. And I hope everyone enjoys the rest of the lunch together.
All right, thank you.
Thank you.
Thank you.